Hi, I'm Mallie Shansfeld, Managing Editor of Implant Practice US, a Medmark publication. Welcome to a live presentation and question and answer with Dave Rohr, CEO of Proceed Finance. If you've spent time and money to learn high-end procedures like implants, but you're encountering patients who can't afford the cost of these services, patient financing bridges affordability gaps and increases case acceptance. Learn in our webinar today about disruptive industry developments and the right patient finance solutions for your practice. Before we get started, I'd like to invite viewers to use the question box in your control panel to ask any questions that you may have, and your questions will be answered at the end of the session. I'm pleased to introduce our guest for today, Dave Rohr. CEO Dave Rohr leads Proceed Finance with over 3 decades of experience in banking, finance, and strategic growth. Prior to Proceed Finance, Mr. Rohr was president and CFO of Cabela's, Inc., guiding the company through a time of unprecedented sales growth and retail expansion, and rocketing them past the $1 billion valuation mark. Included in Mr. Rohr's leadership at Cabela's was his role as founder, chairman of the board, and CEO of World's Foremost Bank, the wholly owned regulated credit card bank utilized by Cabela's to issue and manage their co-branded Cabela's Visa credit cards and related consumer rewards program. Prior to Cabela's, Mr. Rohr, who is a CPA and earned a Master's of Taxation degree, was a partner at tax consultancy Grant Thornton LLP. Mr. Rohr has served on the board of directors for numerous public and private companies, including The Buckle, Air Methods, US Bank, and Security First Bank. I'm pleased to welcome Mr. Dave Rohr and to turn the presentation over to him. Thank you, Dave.
Hey, thanks, Mallie. It's great to be here tonight. I appreciate the introduction, and we're here tonight to talk about a topic that's extremely interesting to me, and I've spent a lot of time and effort developing what I believe is an exciting new solution for patient financing, and in particular with the audience tonight, learning how we can help you create an affordable product for your patients, which obviously will drive more top-line revenue for your practice, which will turn into bottom line revenue and increase the amount of money that you're making, at the same time creating a win-win where we help your patients, you help your patients, and we all work in this together. So that's what I'm here to talk about tonight. So we're going to go through just a few things. I'd like to give you just some ideas on the current landscape in patient financing, what's out there. I've been in the unsecured lending business for a long time. I've studied this market, and I believe we've created something really special. So we're going to deal with that. So we're going to go through just some various things, and then I'm going to show you exactly how we do it, what we do, and how it's going to help your practice, and how you can use this product to make more money and help your patients. And we're in this as a truly a lender that cares, and we've got to think what you're going to see is a special solution. So Proceed Finance was a company that has been started with really an idea that is not new, helping your patients get payment plans so they can access your treatment. But we're a very patient-friendly patient financing program where we are in the unsecured fixed term loan business. We loan money between $2,500 and $55,000 for your treatment plans. These loans are, as I said, unsecured. We run on an instant decision platform, so your patients will know immediately whether they qualify and what they qualify for, how much, and the unprecedented thing we're doing is we're going to extend term loans up to 8 years, which is 96 months. And we offer low interest rates starting at 4.99 that go up through 15.99% for your patients. And we'll get into what all that means here in a minute. We're backed by a company out of Denver. I'm also involved in this from an ownership perspective, where we want to really focus, and the people behind us want winning partnerships. They're interested in making impactful investment to benefit communities, and they treat people and consumers with dignity and would like really to create that type of an atmosphere in the medical financing space. Having said that, let's get into this. First thing I want to go through, which is kind of a fun thing, is let's talk about the perfect world and exactly what patient financing is and is not, and what we all want. There's really three people or three parties involved in this. Of course, you, the provider that are providing treatment. We have the patient, and we have us as the lender. Now, in a perfect world, the provider, you want full approvals and us to approve everybody that applies. You want all your money up front. You don't want to pay any fees. You don't want any recourse, and you don't want any patient complaints or hassles. So that's your perfect world in patient financing. The patient's perfect world is they want to be approved for all the treatment plans that they and money that they want. They want to pay when they can and how they can. They don't want to pay any interest, and they don't want any prepayment penalties or fees. What the lender wants us is we want, of course, everybody to give everybody all the money that they apply for. We want everybody to pay on time. We want no losses, no bad debts, and we want profitable loans. But these three worlds, don't exist in harmony. In other words, this perfect world where everybody gets what they want, we call it, or I call it, a unicorn. It just simply does not exist. So, having that as kind of the starting point, let's look at what we're dealing with here. First thing I want to just go from your providers is just in dental care in general. I mean, we all have difficult business environments, and in dental care in particular, the first thing that interests me, the ADA studies on how important is dental care in a patient's priority system when they look at all the needs and demands they have on health care. Where does dental care fall? Well, it is unfortunately not the highest priority amongst all the choices that they have or needs that they have. So they are the least likely to invest into dental care as other types of healthcare services. So with that being said, you're dealing with that and you're competing against other needs. It's a neglected area compared to the other ones. That's unfortunate, but we're going to figure out a way and show you ways to make it where that need and what they services that they want to need can get taken care of, and it's no longer neglected. Okay, the next landscape you would need to look at is just understanding people and consumers in general. So this is consumer financing. What you're going to see on this slide is really something that's very common that people know about, their FICO scores or their credit scores. And staying with that, you're going to see, and this is a real example of today, is you go from red to green. Red is the subprime borrower, the people who really are not going to qualify for credit. They need to work on improving their credit to access credit markets or available financing. But then you look at most of the population, the fair all the way to the excellent. It's about 75% of the population. So a credit score, just going through the metric, 300 is the lowest, 850 is the highest. And if you look at the part where it starts at 640, which is the beginning of the fair credit, all the way up to the best credits, it's about 75% of the population. What you also need to know is that the excellent credit, and I call these are the people that can normally or in general are classified as people who can pay cash or people who have access to cash reserves or availability on their credit lines and credit cards to pay you cash, is about 20% of the population. So in general, the rest of the yellow all the way to the light green is the percent of the population that is interested or needs financing plans or payment plans to access health care and medical treatment. These are the people that we want you to really consider going after. If you've got a practice that's just cash-only type practice, you're missing a large percent of the population. And for growth, and if you really want to grow your practice, you can no longer just afford to ignore this market and rely on the cash payer. So we offer the largest approval range of any patient provider, finance provider in the market, and we go deeper, and you're going to see offer better terms and conditions. So having said that, we'll go on to your current finance landscape. You know, in the dental finance business and world is you have a lot of factors that are moving around, but environmentally, if we look at this, is with the types of cases and the types of procedures that we finance and that you want to do, this is the 2,500 above, the large cases, all the way from you know, extended treatment plans to the implants to, you know, the high cost, the type procedures, which a lot of the dentists I visit with, they want to do these types of procedures. They're more profitable. They help the patients that need these in a bigger way. It's not maintenance, it's helping people. So the environmental factors is really this market today. Insurance isn't going to cover. There are certain plans that you know, provide for maybe a small fraction of the cost, but in general, the dental insurance market is not going to cover these types of procedures. And what I'm looking around in healthcare financing is, you know, the whole overhaul of healthcare and dental insurance. It's not going to get any better. So you're relying on people having to have money or needing payment plans to access this type of treatment. From the consumer's factors is really you look at, okay, what are we dealing with here? You've got, you know, you have, they want access to consumer-friendly, affordable patient finance and low payment plans that make it work for them. You know, they have limited discretionary savings in a lot of cases. I mean, there's some pretty scary statistics out there about that. The likelihood that, you know, the prioritization of their healthcare needs of dental care versus other personal needs and the, you know, competition for their dollar. There's just a lot of things that, you know, they say no, they just can't afford it. They don't like the cost, and they just, all of these things, you know, result for you lower case acceptances, you know, which obviously then you have lower revenues for your practice, lower profits. And overall, it lowers the value of practice when you ever want to monetize your practice. So with that, you know, I always try to explain, okay, of all these factors, environmental and consumer finance factors, you know, what can you control and what can't you control? If you cross out really everything on the environmental side, because you really aren't going to control dental insurance or the future of dental insurance and what employers or whoever is paying for it, what products are out there. But on the consumer side is, you know, you can't really control what people make, how much money they have, people that come into your office. One thing you can control is what type of patient financing product or program do you have in your office, and does it meet the patient's needs, and is it something that they want and it can work for them? So you can control that. So if you now can work on, you know, the pressures where I can increase case acceptance, I can, you know, then increase in turn increase revenue, your income, and the value of practice. So what is a consumer-friendly, affordable finance program for your patients, and how does it translate into a bigger bottom line for you? You know, it's really one that, you know, the first thing is, and I see this all the time, especially with the high-end procedures, and I talk to doctors and you know, that do a lot of implants or the high-end procedures. And the first thing they say, look, you know, a lot of people say no because they just simply can't afford this. There's sticker shock. There's, you know, I need this, I want this, but I can't afford this. And maybe, you know, you analyze that. Well, maybe they can afford a low payment, or maybe a low payment will work into their budget if that's offered to them. So if it is, I will guarantee you that case acceptance will increase, and you'll get more people to say yes. More low payment, you know, will equate to more approvals. It's been proven. I see this all. I mean, one of the fun things I hear from providers all the time, especially you doing implants, is, okay, our current finance options, it all comes back, and what it looks like to the patient is they're taking on another house payment. Well, that scares them. They can't afford that. But if you can make the payment plan look like a car payment, the acceptance rate skyrockets. They're going to say yes, and they can make that work into their budget. So, that's really when I talk about affordability is you've got to make a low payment, which is going to or offer and get the lowest payment. So that's going to result in more approvals and more acceptance for your practice. So that's the culture you want to create. So how do we do that? Well, there's various things that make that happen, and how we do it better than others is if you look at the patient and exactly what are they looking for. First thing I hear all the time is the patient wants full funding for their treatment plan. I mean, you'll offer them a treatment plan. It's expensive. They need a lot of different treatments. You want to do it right. They want it done right, but it's affordability. So how do you get a financing plan that covers it all the first time and gets it right, so you can offer treatment the way you want to do it? They get the treatment. You fix their problems. You improve their health. You improve their attitude. All of their emotional benefits come true. Their life improves. It's all the things that everybody wants, and that's why we're in this business, is to really help people solve those problems and make it affordable. So that's what we do. Who is not our patient? Well, we aren't really financing people that want 0% financing. We believe that's a bad idea for both the patient and the provider. I can talk about that later, but it's something that we don't want to do, and it really is expensive. As a lender, I'd love to do 0% financing because that's probably the most profitable product out there, but it costs you a provider a lot. It doesn't really benefit the patient. We've got a better way to do it, and everybody does better and makes more money, and the patient's treated better. So we're not in that business. The right options for the provider is, okay, how does this work? So how do you get this low payment and so these patients can say yes and it works for them? Well, really, if you look at the equation, it's interest rate and time. Is the longer payment term that a patient has, the lower the payment, and the lower interest rate that equates to that is a lower payment. So you put those two together, you get the lowest payment possible. And how we do that is we go 8 years. We actually offer patients anywhere between 24 months and 96-month options. A lot of them obviously want the lowest payment, so they go for the 96-month option. But if you can combine that with a low interest rate, you get some really exciting low payments that work in their budget, and they're surprised that your treatment plans now are affordable, and now they want it and they say yes. It's treatment plans over $2,500. Like I said, we go from $2,500 to $55,000. So we're going to do the large cases, the mid-sized cases, and the cases that are not, your maintenance stuff, your cavities, bridges, crowns, that sort of work, unless there's multiple needs in that area. But it's $2,500 above. But we've created some exciting affordability in that area. So moving on to what else we try to do is we make it affordable. Now, I can't emphasize enough on conversion rates and acceptance when a product is affordable on a payment plan. I mean, the conversion rates that can be created, and if they're presented to your patients correctly, gets extremely exciting. And the amount, it's really a win-win, because the patient wants and needs your treatment. Is all about affordability. You want to provide it to them. You want the case. You want your practice to become more profitable. So it's really exciting. Now, how do we do it? How do we distinguish ourselves that others don't do? This does not exist in the marketplace. I created it, and it is how all this works. We have a shared risk model. We believe that to get this all to go together, that perfect world that I was telling you about that doesn't exist, is all of us have to put something on the table to make this thing work, where we can create this exciting product for a patient where we all win. The shared risk model simply says that if we're all in this together, if we charge you as a provider based on credit risk and time, that the higher credits or the great credits, you pay less than you do today for those types of credits. But if we take on additional risk as a lender, then you're going to pay more in terms of a provider discount. Time also is a factor. The longer we stretch it, the more risk, credit risk, and the more things that can go wrong. So we charge more for time. Interest rates can change, all of those types of things. Ours are fixed term loans, so we don't change the payment. So as we take more risk and you take more risk, it gets more patients into the programs, and we also charge the patient based on risk. So the great credits get our lowest rates, which they deserve. The higher risk patients that we take on will pay a higher rate. Time also is part of that equation, so the shorter loans get a lower rate than the longer loans. So combining all that together in an underwriting thing that's exciting, where we go down to FICO scores as low as 640, which no other lender will do with those types of terms, basically means we give complete treatment plans. In other words, when people apply with us and ask for credit, it's highly likely we will approve all of their treatment and credit that they ask for, so they can complete everything all at once. You don't have to do with partial treatment plans or stage treatment plans. You want to get it done right the first time. That's what we all want, and we're going to allow your patients to do that. So the other thing we do that's kind of exciting, that if a patient applies and isn't eligible for the total amount of credit or procedure costs that they need, we do give the most competitive counter offers in the industry. So we will loan your patients as much money as they're entitled to based on their ability to pay, and what that means is that you'll get the ability to be able to give them the best treatment plan that you can. So all of that, it's an instant approval process. When a patient comes in, it's a very simple application. It's a pre-qual, so they put in what the procedure cost is going to be and or what amount of credit they would like to apply for. Within seconds, a decision is made, and then offer or a presentation of what they're eligible to get is presented to them. So all of a sudden, immediately they'll know what their options are, and if they want to pick one and proceed, and you can get them to go forward with the treatment. The rest of the loan process to close the loan is easy, and then you get your money within usually a day or two after the procedure certified that the patient's going to go forward. We put it in your account. It's ACH'd, and it works really slick and well. So we wanted to make it as easy and usable as possible, and works for everybody. So we're excited about that, and we would like to show you really how it works, because this is the most flexible payment options for patients and the provider that exists in the marketplace. We're proud of it, and we're going to do some exciting things. Now, when you get into what we try to create here, and what you're seeing on your screen is really, earlier I said, hey, we all want something that doesn't exist, and if it did exist, the other two sides of it are going to be way out of balance. We balance the provider's needs and what they need and want, the patients, what they need and want, and what we as a lender need and want. And if you put all that together, we all share the risk and step up to the table where we work together to get the win-win situation. That's what we do. There's a lot of different things that go into it, but we really try to give you, the provider, of course, all your money up front, reasonable fees. It's a non-recourse product, so you're not involved in any servicing, collections, or approvals. And you get more case acceptance, which results in more revenue and a better loan experience for the patient. You're going to get what we believe some intangible benefits with this product, because if you treat the patient right and they're satisfied with that experience, you're going to get referrals, you're going to get repeat business, and it's just exactly the type of thing you're trying to build. So with that, we're going to talk about incremental revenue, and we want to talk about how this actually benefits your practice. I'm going to give you, in this particular screen, some live examples. So this is a practice, and this is a practice with two physicians or two doctors operating together. They in 16 did these numbers that you see, and they were making a good living. They were operating on about 75% capacity. We all know most practices have empty chairs. They have unscheduled appointments. They can take on additional business with their current staff, and are looking to completely utilize their facilities. In this case, this practice is about $1.6 million. It's about $800,000 per doctor, which is pretty close to the national average. The costs of running that practice in 2016 are on the screen. It comes down to where about 40% of the top line was going to the bottom line that was divided amongst the two doctors. So, they're each making about a little over $300,000. So that 40% is where they were. Now, I've seen in this industry, that number, that doctor net income, anywhere between 20 and 50, depending on the type of practice, how well it's managed, all those types of things. But this practice was at 40% that the doctors were taking home from the top line. Now, adding our product is into this practice with case acceptance, because they had a lot of cases where people wanted treatment, they were saying no, they couldn't afford it, or they had to send them out, or they just weren't getting financed in any way that made them feel comfortable moving forward. So with our product, if we were able to, in this case, a 10% increase, we increased their bottom line by 10%. And this practice actually did better, but I'm just showing a 10% increase. If we were able to increase it 10%, what changes in this practice? Well, they have the capacity to handle that 10%. What changes is, their direct costs, lab fees in this case, or things that are direct result of providing that treatment. They don't have any more facility expense, no more office expense, no more rent, all those types of fixed costs. Our average discount fee to finance these procedures, based on our risk-rated model, was about 7%. It runs between 6.5% average, with the high risk versus the low risk cases. But at the end of the day, this practice was able, at a 10% increase, was able to increase the doctor's pay from $639, split by two doctors, up to $765,000. Now that's a 10% increase. With a 20% increase, which they could handle, it gets real exciting. The doctor's compensation went from $639,000 to $890, and a 30% increase, it gets extremely exciting. Each of the practice net income to split went slightly over $1 million. And what happened in this particular practice is we're seeing a lot of our practices that put this in, that we work with you on training on how to present this to patients, to how to increase that case acceptance, how to get patients to say yes. And acceptance is, we have 30% increases in practices happening quite frequently. Sometimes it's less. It just all depends on all the facts of the case. But that's the type of lender we are. Is we want to be your partner. We want to go in and help you do this. We do not charge to sign you up in this. Our training is provided as part of the services. So the only time we make money is when a patient takes a loan, which then obviously is a revenue event for you, and the patient gets the treatment that they need. But we pride ourselves in going that extra step. Besides just training on how to use our technology, we train you how to make more money and how to get that case acceptance and create that win-win situation. So that's kind of how the model from an incremental revenue works, and we're happy to demonstrate, your practice and your numbers. You just have to get a hold of us, and we can, put your information and your actual practice in there and see what we can do for you. So that's what's exciting. When you contact us, we're happy to do that. And that's just one of the value adds that we provide with our product. So in summary, just taking a look is, we know there's a lot of pressures in the dental industry. You know, we know some are controllable, some are not. The ones that you can control is the type of products that you have and that you purchase and that are in your practice. We believe that every practice, especially with dental insurance almost being non-existent for the high-end or the expensive procedures in terms of coverage, is that you're going to need a friendly, quality patient financing program, because you're not going to be able to rely anymore on the people that can pay cash. Everybody we know chases those people, but you know, if you want to broaden the horizons and be able to treat and get your the middle America types, that 640 up to that 780 credit scores into your practice where they have affordable payment plans, they need that financing, they need that flexibility. You know, you're going to need a quality program, and that's what we're all about. That's why I'm doing this. Is we really want to create a quality, affordable payment program for patients who now can access your treatment, and everybody feels good about that because it improves their lives, it improves their health, improves their emotional states, improves what they do. It's just all a win-win, and that's what we're all about. So that's why we're doing this. You know, you make more money, the patient's happy. We facilitate all of this, we make it happen, and we feel good about ourselves because we're really trying to help people. So we're trying to change lives without changing lives. So we on the final screen is how do you get a hold of us, and how do we tell you more about what we do, get more into detail, how do you sign up with us, and how do we put this product in your practice. Is the contact information is on the screen. Our phone number at Proceed Finance is the 844-272-7587. You can email us at hello@proceedfinance.com, or you can go to our website and learn all about us, and the information is all there at www.proceedfinance.com. We'd be happy to talk to you. We can explain more, and I know you have a lot of questions, but we're really excited. I mean, I wouldn't be doing this if I didn't believe in this product. I know we can benefit practices, use providers, we can benefit patients, and we can all, you know, walk away from this that we help people, and it's a win-win-win. So that's what we do. So with that, I'm going to turn it back to Mally, and I know there's questions, and I'll be happy to address them, and I appreciate the opportunity to present. Mally?
Hi there, Dave. Thank you very much. I do have some questions from the audience, but before I get to those, I also would like to invite our viewers once again to use the question box in your control panel to ask any questions that you may have. Okay, first question. Let's see. You need to drag that down to the bottom of your screen. But the first question, you said that 0% financing is not a good idea. Why is that?
Well, hey, thanks one of your viewers for asking that. Is when 0% financing, you know, traditionally you'll see that in a lot of practices, and what it really is saying is that a lot of practices use that as a promotional tool. They believe, hey, that draws patients in, it makes them accept treatment, and they view that as a huge benefit to make them say yes. Well, if you really analyze that, what's going on here is the first thing a provider needs to know is it's expensive. You know, to offer a 0% 12-month financing or 0% 24% month financing is expensive. I mean, your provider discount is going to be 10–15%. So that's the haircut off your treatment cost. And the patient thinks they're getting a great deal because it's 0%. But if you really think about it, is okay, split that payment over 12–24 months, still a high payment. And yeah, there may be some economic benefit of no interest, but it's negligible or very small in today's interest rate environment. So really what's happening is the provider is paying a lot of money for very little benefit to the patient. There's a better way. Is why don't you take that patient's payment for that treatment plan and spread it over 72, 84, 96 months, whatever term we're going to give them. And most of our patients will get the ability to do 96-month payment plan, a lot smaller payment. They say yes. One, you save the 15%, you pay a lot less in provider fee. The patient, yes, they do pay interest, but they get a lot lower payment. That's really what they want. Most people who take 0% financing, quite frankly, are people that don't need it, and the ones that need it can't afford the payment. So it's really an expensive form of financing. It costs your practice a lot. I run in a lot of practices and say, look, I talk to somebody and they say we're giving away too much on 0% interest, and I say yes, you are. So I've a lot of practices have just eliminated it because it really doesn't make sense. But we'd show you all about how that could work in your practice based on how you're using it.
Okay, our second question, very good answer to that. What are some of the reasons patients don't accept financing for their procedure if it's offered?
Well, that's a really good thing, especially in the higher cost procedures. What I'm seeing is, okay, they get approved, but they don't accept the financing, and they don't move forward. They may get approved for a credit program, but they say no. Why is that? Well, one, it's sticker shock for one on the pricing. Number two, when they do get approved, they see terms and conditions that really they're uncomfortable with. A high payment, like that house payment versus car payment. Terms and conditions that don't look friendly, and so it just scares them. And they, if you don't convert them when they're in the treatment room, and you let them go home and they think about this, they're going to look for other alternatives, and the likelihood of them coming back and converting decreases significantly. So, they don't accept the financing, and they say no because they don't like the terms and conditions, and they don't feel comfortable that they can afford it and it fits their budget, and they can still live the life they want to with that payment. So that's the main reason I see.
Okay. How does patient finance offering affect my image or reputation?
Really good thing. Great question. What we've heard and I see is that patient financing programs are viewed as part of your practice. Whether or not you have whatever brand you have in your practice, the patient's going to view it as an extension of your practice. So if you put it in there, it's part of your brand. And if they have a poor experience, predatory fees, late fees, retroactive fees, high interest, retroactive high interest, all of those types of things, they aren't going to blame the finance company so much as they're going to blame you as well. Because why did you do this to me? Why did you put me in this program? This is a terrible experience. I can't afford. I'm getting poorly treated. It comes right back to you. So, what do you think the chances of a patient experiencing that sort of a deal are going to refer another patient to you or come back? It's diminished exceptionally. So, it does have an exceptional problem that could come right back to you. And I've heard providers saying, look, okay, I don't want to use this finance company because I never see these people again. I mean, I put them in that program and they never came back. With our program, we treat the patient with dignity. We believe that creates that better experience for everyone. And we don't charge late fees. That our largest late fee is the smaller of $10 or 5% of their payment if they're late, and that's it. There's no retroactive interest. There's no penalties for misbehavior other than that. So that's what we believe. That just helps everybody with the experience, and it helps us because people will likely perform better on their loans if they believe they're being treated fairly and with dignity. So that's the experience we create.
That is true. What is the difference between a vendor and a partner in terms of patient financing?
Great question. I don't like the word or to be treated as a patient financing vendor. To me, that just sounds bad, and I don't. That's not what I do. And what our company does is we want to be your partner. And what that means is, okay, I'm not going to just come in and put a product in and go away. I'm going to be a partner, and I'm going to try to help you leverage what I know and my experience and how this product can work, the successes other practices are having using this. And I'm concerned about you. I want to know about you. I want you to be successful with this product. And the only way that can happen is if we're partners. So, we talk about each other, hey, this is, what I know and what I do. This is, I need to get to know your practice, because every practice is different, and there's just all sorts of different models out there. And if I don't know your practice, I can't help you as much as if I do. So I want your time to tell me about your practice. I want to know about your practice, and then I want to tell you how I can improve your practice. And here's what I know using a patient financing product and model that I have. And we're partners. If we're both successful, it's a great deal. So I can't be successful if you don't use this product, and you can't be successful if I don't show you how to use it. So that's the partnership I try to create. And we're not a vendor where you buy something from us, and we go away.
In looking for patient financing products, what should I look for? How do I evaluate the patient financing products for my practice?
Well, there are obviously other solutions out there, or other products, I will say, and there's some have been around quite a while. Some are new. The biggest thing you need to look at, of course, you're all concerned about the basics. What's the cost? How does it work in my practice? What are the fees? All of the things that are your bottom line. But what I look at is, okay, cost side of the equation, fair question. Everybody ought to be concerned about it. But I always say, have you asked me this question, is how can I impact your revenue with a patient financing program? And if I can change your top line and move your practice and make it more profitable and create more case acceptance and create things that are positive for your practice, that's what I'm interested in doing. Now, if you're only interested in cost and you want to save a few basis points here and there, I'm not going to be able to change your practice. I can change your practice by increasing case acceptance and stuff. So I evaluate a patient financing product on, how does it move my needle in terms of my objectives on case acceptance, more revenue, more profit, and making, a win-win situation. So that's what I try to do with a patient financing product, and that's how I would evaluate, people if you're looking to put a product or change products in your offices, is ask those questions.
Okay, next question. Viewer already has a finance option in my office. What makes your approach different from all other companies?
Well, hopefully you've gotten some of that by now. I mean, we are really a eccentric or type of the provider and a lender that cares about you and your patients and doing the right thing. So, we have better terms and conditions, longer repayment plans, cheaper or lower payments than any other provider. I mean, or any other competitor. We are going to offer the best financing solution that's available for your patient based on, of course, their credit risk and their profiles. So that makes us hugely different, because you're going to have the lowest payment plan with us versus anyone else. We are going to care about how we do business, where we are a solution that is very partnership oriented, and we're going to show you. We have two types of training. We have one, the technology training on how to use our product, how to get a loan through the system, how to use the cloud-based instant approval platform. But we also have a training session that's optional, but is, how do we help you make more money and get case acceptance up there, which is all the little things we've learned, over time and from other what's being successful as a provider. So we're very provider centric, and we're patient friendly. And we also, when that comes together, you get referrals, repeat business, and we're a great solution to help your patients access the treatment they need and want. So that's what I believe makes us different.
All right, we're kind of running out of time today. I thank everyone for their questions, but if we did not get to a question that you have, we'll answer it after the webinar in an email. And write down that email address there, hello@proceedfinance.com, if you have any questions. Again, I would like to thank everyone for attending the webinar, and a special thank you to Dave Rohr for a wonderful presentation, and Proceed Finance, our sponsor. Thank you, and have a good evening. Thank you, Dave.
All right, hey, thanks, Mally. Appreciate being here tonight. Good night.
Good night.